All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market's down a little bit here today. Nothing too dramatic from an index standpoint, but you can see market has had a little bit of a move here today. 29.32 down to 29.01. That's a 31 point range, right? Here on the market today. That's much bigger than what the market has been experiencing. Yesterday, we saw 29.55 and 29.22. So, more than a 30-point range yesterday. This puts back-to-back days of more than a 30-point range on the market. Now, what's significant about that? Well, if we come in here to the SPY and we come in and we put on the average true range here with it, what do we know? We know that when the average true range is falling, the market tends to go where? Tends to go up. When the average true range is rising, market tends to fall, right? When you see back here in October, the average true range, really surge, that's almost always on a downside market. We have an average true range that is starting to tick up, that is starting to push on higher here, and that is a warning sign. It's not in and of itself hey, this is super bearish or anything like that. But this is a precursor to every sell-off we see in the market, and we're getting that precursor here today. The other thing we're seeing in the market is the 3-day moving average crossing down below the 7-day moving average, which we don't see happen very often, right? But it's still trading above the 20-day moving average. We saw a 3-7 cross down right back here. We saw it right here, right? So in and of itself, it's not super bearish, but we do have that precursor starting to set up right here, and the average true range starting to increase here as May begin. So those are two warning signs here, things that we see before strong corrections, and both of those are emerging. Now this morning, I hesitated to kind of really make any sort of major call on the market or anything like that. I did want to see what the closing data here was today. And so let's go out and break down the market vibe here a little bit, because the market vibe reading is 0 right here, and it's a neutral reading. And it's complete balance of bullish and bearish internals, and something that, when the market's hitting new highs and we have a 0 on the market vibe, that has not happened very often, and that's some pretty negative divergence in some of the market internals and some of those internal indicators. Let's just go take a look at a few things. Let's come down. We'll start out with volume here. And let's come in and we'll take our advancing versus declining volume on the S&P 500. On the New York Stock Exchange, and we'll put it on an aggregate chart. So on up days, it adds it. On down days, it subtracts it. And we'll come get our symbol right in here, NYUD, and we'll see what this looks like. Okay. One of the things that is changing today is the volume element. For most of April, now, and especially the back half of April, the volume element has not been bullish. The volume element has been neutral. The bulls have not had control of the volume element since mid-April. Then they've lost that control. Today, we actually see the volume element moving out of neutral and turning bearish. Now, we see that on little pullbacks. In and of itself, we see this happen all the time on little pullbacks. In fact, we got a whipsaw reading back here in March, right? But for a sustained period of time, seeing the market, not be in a bullish volume territory and now coming into a bearish volume territory, that is not something we see all that often. But definitely one of the areas that's switching and pushing the market vibe lower here today. If we come in and we look at the IWM, small cap to large cap performance, right? And let's come in here to performance. And there's the IWM, so we'll put in the SPY. You can see over the last 30 days, small caps have caught up. Right? Small caps have played catch up and have been, kind of coming back in line with the S&P. This is actually a metric that has been improving and improving for the bulls. And it's one of the reasons why we don't see the market vibe turning bearish, right? Yeah, we have the volume element going down. Bulls are losing control of a few other things. But where they haven't had control, they're starting to at least recapture a neutral, right? This has been in the favor of the bears. It is now in a neutral territory. Now, if we change the time period on this and we go to 2 months, right, you'll see the performance differential here is over 4.5%. It's a massive performance differential, but during the month of April, it was equal performance between large caps and small caps here in U.S. markets. Now, if we come and we look at the performance metrics of the SPY, and we compare that to something like the emerging market ETF, the EEM, right? This has been one of those that's been bearish, but we also have seen the emerging market performance kind of come back in line to where it's very neutral, not really given any sort of major read there. If we put in China, the FXI, we have that. We have a little bit of a different picture though, right? We have about a 3% disparity. China has been a big laggard over the last month, and big laggard here, and one of those things where definitely doesn't give investors a comfy, cozy feeling when you start to see China lag to this this degree here. We come into some of the other metrics, some of the other performance metrics. A bullish percent index, right? Still neutral, still bullish. Has not, given that 6% down here with it. It does have that potential, right? It did have this down day right here, but a 6% move in a matter of a week, it just hasn't had here yet. It's just kind of having some oscillation here in it right now. So still in a more bullish mode than the bearish mode. If we look at the number of stocks trading around key moving averages, so the 20-day moving average here, you can see there are actually more stocks trading above the 20-day moving average on the S&P than there are trading below it. Right? So, bottom line, what's the point? No, it's all balanced. There are some things that are bearish. There are some things that are bullish. But when we take it on aggregate, the market vibe gives us a 0 and a neutral reading. That isn't a big bad bear signal. Now, ultimately, it could turn into that. But at this point, that's not what we are seeing here when it comes to the metrics. Now, we are seeing erosion in participation. We are seeing, a bunch of stocks hitting new lows. There are still bearish opportunities, out there, as well as, bullish opportunities. But, from an aggregate market standpoint, it is still a very neutral type of environment here, with some of the risks starting to increase for a much more significant pullback. But let's face it, does the market ever go on a big drop after hitting a brand new high without setting a lower high? I mean, you just can't find very many instances. Even back here, market hit a new high. We had a little pullback. Market rallied again, failed to break the high. We had a slightly lower high, but at least, something in terms of pullback and rally back where the bulls kind of failed, right, before the pullback. To just say, well, boom, right from a high, down we go, big. You just don't see that happen very often, right? That's not the normal when it comes to the overall market. And while, yes, I do think, there's a very good chance that tomorrow we could see a big red candle stacked right here on the S&P. I see the S&P down here at the lower Bollinger Band. I think that risk is actually pretty elevated out there with the jobs report here tomorrow. It is something that, from a metric standpoint, is not very confirmed. But anyway, that's the market vibe. That's kind of the market internals and where they sit right now, and how they are playing out right here. I thought for sure I'd get a few more bearish signals on some of the stocks on my watch list today, but really don't have many, out there to speak of in terms of, hey, today's a fresh signal, and off it goes because of today's signal. Just not a lot of it out there. If you come in, you take a look at something like an American Airlines. Let me kind of pull up a little bit of a chart here. It's had a pretty nice reversal here today, but not a downside bearish trend type of signal. Most of the trend signals just aren't emerging, but there are some nice little oscillation signals that have come in and that are out there. You can see Caterpillar here, has the downside 3.7 crossover, still doesn't have that 39.1 below 50, right? So there's still some risk associated there. But, you start to see the average true range on the rise. And I suspect if you go into your watch list and you start looking at stocks and you put on this average true range, you're going to start to notice that there are a lot of average true ranges that are increasing and starting to increase at an accelerated rate here. Now, overnight here tonight, we'll have some earnings. Right, we'll have a few earnings on tap. In fact, let me pull them up. The companies that are reporting here. After the bell today, we will have Activision, not exactly a market mover. Gilead, not exactly a market mover. First Solar, right? These are important earnings for those individual companies, but these aren't market-moving types of names. And then we go into tomorrow, and it's pretty light, right? We'll have Marriott and Viacom, but nothing that's big-time market-moving. Right? So, the earnings data is in. There are earnings that will affect individual companies, but as far as earnings and the market, the data is in, and that's not we kind of put a bow around the earnings season. We know what the numbers are, and what some of the risks and what some of the rewards are from the season. All eyes tomorrow morning are going to be on the U.S. jobs report. And it's one where I can't help but wonder, and as I look at different things here today, I can't help but wonder if we don't see a gap up on the jobs report. And if we see a gap up on the jobs report, is that going to give a really nice opportunity to sell into it? And I think whichever way the jobs report gaps, the path of least resistance is going to be the opposite way for the trade tomorrow. Now, some of that will come down to the services, PMI, and non-manufacturing services numbers. We will see some European inflation data here overnight that will come into play here as well. But, when it comes down to the focal point, right here, right now, it's going to be the jobs report. But keep an eye on this international trading goods number. We've actually seen this move the markets a few times when normally it doesn't. Normally it's more of a currency thing, but it has increased things here just a little bit. Okay. Alrighty, well, thanks for hopping on. Anything, please let me know. I'll be back on here with you tomorrow. We'll continue with the 30 indicators, 30 days. We'll go out and take a look at more of Wells Wilder's indicators, build on the RSI that we talked about here today. I will talk about the upcoming challenge and go in detail about the upcoming challenge that kicks off next week. So looking forward to that. We'll show you some of the watch list additions and the finalized kind of parameters and rules there for it. And we'll go from there. Again, thanks for hopping on, and we'll talk to you later. Take care.